Traders, did we just signal the top in gold? Stock market as well too. There's a lot of things happening, and there's obviously this screenshot here I want to cover with you today. Notice this thing here. Notice we get volume spikes at least a short-term top in the market. That's what I want to cover with you today. Also, I want to cover with you when it comes to the crash charts, why the analogous situation that's happening in the stock market right now is giving us a potential warning, and that is warning of, let me see if I can find it for you. This guy here, look at this guy here. There's an analogous situation that's happening right now in the markets. And everything is starting to signal a potential correction in the markets here. So before I do start, guys, make sure you see that book there. Go get it. First link in the description. Now, I'll start off with the good old gold here. So one of the things you'll notice here is that I've got so many screenshots here. Oh, by the way, guys, like how I personally trade, people don't. Look at all these. These are different trades here. What do you notice? This is a trade here. This is the trade here. These are the trades here. Trade. What do you notice? Just one moving average, right? That's actually all I trade, by the way. If you'd like to learn my actual trading system, that's second link in the description there. I actually teach you my trading system. But that's all I use. One moving average. That's all you really need. So anyway, back to squirrel. Back to the topic at hand. So one of the things when it comes to the what's happening with gold right now is let me actually bring this up to here. Is I have a section here called volume spikes. Okay. And if you look at this here, this is just the meta chart here, and this is not there's no guarantees in the markets, right, guys? But it does help us signal at least some short-term movements in the markets. Okay, so one thing you'll notice here is that whenever we do get volume spikes, that either signals tops and bottoms in the markets. Okay, so the market's been going down, volume spike, bottom, up, volume spike, bit of a short-term top, so on and so forth, right? Same thing, this is the same thing here with gold, as you can see. What do you see here? All through here. And do you remember, I'm pretty sure you do, right? Remember if you remember this thing here, let's bring on the actual GLD price here for you so you can actually see it. So you remember how we actually went sideways for 3 months and it didn't really do much, and now we've had another big move? Well, as you can see here, right, what signaled the end of, and as you can see, we actually had we had a very big move up, but what signaled the move was what? See that big volume spike right there? Volume spike, volume spike, volume spike. Do you see that there, right? So all the different volume spikes, whenever we have been going up for a while, meaning we have been doing, let's go green, right? We've been going up, volume spike, signal top, up, top, up, top. Now this is obviously short-term analysis, right, guys? Short-term. What that simply means is that if we've been going up for a while, like we have here, and we get a big volume spike, it's probably signaling that we're going to at least get a short-term top in the markets. I actually believe that this correction is likely to be a lot better. I believe that we're actually now getting very close to the actual top in the markets. And if I go down to, boom, this chart right here. So this is the chart that I put together. And as you can see, look at this here. This is the gold chart right now, as I speak, right now. Now notice one thing here. Now, no, I'm not calling, actually, yes I am. I am calling that we're getting very close to a significant top before we see a big correction in the markets. And I always knew the hardest thing about what happened in the last couple of weeks is that I always thought that we'd actually end a lot earlier than we did, and I got that wrong. But I just knew that sometimes I just knew that the end was coming. I just didn't know when, right? So, and I believe we're getting very, very close towards that right now. If not, today is the day before we actually eventually start to see that big correction into next year, because I see everything setting up for a big correction next year. But I'll get to that in just a minute in the stock market. But for now, look at this here, right? This is the GLD chart going back to 2020. Every time we got volume spikes, volume spike, hey, volume spike, top, volume spike, top, a little bit of volume spike there, a little bit of short-term top, right? And this is short-term analysis, right, guys? Like it's an overall like, okay, what's happening right now? Volume spikes, that point, volume spike there, that actually signaled that point there before we went sideways. This volume spike here before we went sideways. This volume spike here, which is much, much, much larger, and we're at this point right now. So could we just go sideways? Yeah, we could just do another one of these guys, right? Look at this here. Every time his last few ones, there's the big volume spike. We just went sideways for 3 months. This one here went sideways for 4 months, and now we're doing this here. But I don't know about, guys. I don't know about that. I'm sensing something like this going on. A big correction in the markets, a bit of a correction in the markets, and this is actually now signaling the same thing for, if we actually go to the charts here. This is the GLD, the SLV. You can see the same type of thing, right? That we're getting a bit of volume spikes from here, and even actually the mining sector as well too. Look at this here. If I zoom right in, right? Look at the volume spike there. That point there and big volume spike after a big move up generally signals a bit of a correction coming in the markets there. So for you guys that are short-term traders, for you guys that are what's called leveraged, right? Now I know some of you guys are not going to listen to this because your bias is this guy's wrong again. Okay, hey, I have no dog in the bone and bone in the fight, but hey, if the market starts to give us a probability of something happening and you ignore that, don't go cry to mummy when the market rips your face off, because you are the person. Remember, you are the person who took responsibility. See, for me, it's not about being right or wrong, but as soon as I start to get those warning signals, it's get out. I may be wrong sometimes, and my calls may be wrong, but my trading, as soon as I start to see those warning signals, and if there are warning signals, then we need to start to listen to those in the markets. And I'm seeing a lot of people, they're saying, oh, John, you're wrong again. It's okay. It's okay. Because only you know, right? And I know there's so many people out there right now that are leveraged long in these markets, and unfortunately the coming correction is going to rip a lot of people's face off, and that's what's coming in the metals and miners. The exuberance in these markets right now, and as you know, through every single cycle, cycles do come to an end, guys. And I know you're not listening to this right now, but 6 months down the road, when you guys that are saying, John, shut up, gold's going to 10,000 right now, you're a moron. Okay. I actually agree with you. I believe gold's going to 10,000. Yes, it's going to 10,000, right? I agree with you 100%, but not straight away. Not straight away. We need a bit of a cooling off period, right? We need a. I believe we've actually made the high now for at least a year in gold in the mining sector, and I've always believed that. Over the last month, I've been putting videos out there. I didn't know exactly when the top was going to be in, but I do know when the market starts to give you warning signs like, hey. Now the market's giving, hey, you know that whole warning light in the Dutch bell? It just came on every now and then. Now it's like, bah, 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 bah. It's like, no, forget it. Don't worry. Yes, the oil light's on. Yes, there's low oil pressure. Yes, I know I need to fuel my top up the oil, but it's okay. I'll just give me another 100 miles, and boom, the car blows up on you. Right? That's what trading is about, guys. Right? Trading is about listening to the warning signals, and unfortunately, I do know, as you guys see with this here, this screenshot here is what? Look at this guy here. Let me zoom right. Let me see if I can zoom right in here. Look at this here. This guy here. What is this? $1.2 million. Dead. This guy over here. $30 million. 10 minutes. Dead. These guys here. $18 million. $16 million. $15 million. $13 million. Dead. You know why? Because the exuberance of the bullishness of the markets, people will go, not only do they go in the markets, but they start to load up on margin. Especially you guys that are trading shorter term options on these markets, you're going to get your face ripped off. And especially if you have no risk management at all, then that is going to be the biggest thing out there. I promise you guys. And I know some of you guys are loading up like massive amounts of your trading account, and especially when you're doing that in options right now. And then not only that, but like 100% of your account is now net long on one market. You are gonna be another one of these guys, right? And I don't want that for you, right? I want you to be around here I want you to be around here 10 years from now, doing, you know what? I'm kicking ass, John. I'm kicking ass. So that's what I'm seeing there when it comes to the good old gold market and so on and so forth. So just bear in mind, guys, we are getting towards the end of the market. We are getting towards the end. I always knew we're getting towards the end, and we are getting very there. And just remember, every single market has its day, right? Look through history, not through the lens of your trade right now, which I know is hard. You know, if you're net long right now on gold, especially if you have a large percent of your portfolio in just one market in the metals or miners, and you're like, let's go. That's not good. But just remember, guys, every single bubbly market has its day. What does that mean? When in history, when you've seen these bubbly periods, guess what? Those bubbly periods end up ending. They do end. And then there's another sheriff in town. A few years ago, what was the sheriff? A few years ago, the sheriff in town was what? Crypto. Crypto. Mania crypto. Okay? Eventually what? Eventually that came to an end. It's actually still mania crypto right now. Now lately, for the last couple of years, it started with the AI, right? The AI. AI stocks. AI, Nvidia, Microsoft, Google, Amazon, AI. Oh, and then everything has its day, right? Now it's metals and miners. So the metals and miners are the flavor of the season right now in the cycle, but just like all cycles, they do eventually end. It doesn't matter what you think, hope or fear, they do eventually end, and then we go through this phase here. That's why for me personally, for the next 12 months, I've positioned myself down the bottom here. That's the bond market, TMF and so on and so forth, right? So if we go have a look at, or actually while I'm there, let me just show you the bond market. All right, so I'm seeing, this is interest rates here. This is the interest rates. This is the 10-year, by the way. Let me bring on, there you go, this one here, right? So this is the 10-year. The 10-year starting to come down through here. Interest rates are really starting to roll over from here. This is the interest rates coming down. This is the 10-year, and this is the 30-year as well too. And we're starting to really roll over from here. So I wouldn't be too surprised to see this interest rate still to continue down now overall. We were sort of hovering around here for the last sort of 6 months or so, but now we're starting to continue down. And then on the back of that, we're starting to see things like TLT starting to move to the upside, and the one that I'm in right now, which I have been for a while, which is TMF. I believe TMF has found a bit of a bottom now, and we're starting to slowly pick back up. Things are slowly starting to change, and I believe we're likely to start to see a rise overall in these markets. And if I bring up this screenshot here, you can actually see where we're at right now. So I wouldn't be too surprised over the next 12 months that we start to see TMF potentially even just rise up towards that 65 level. Looks like it could get to. And that's where I'm positioned now. This is a bit more of a longer term type of trade. What I mean by longer term type of trade is my average trade is around a few months worth of time in the market. That's more for trading purposes, right? Because I'm a swing trader. Meaning I've always done really well out of trading from trying to getting in and generating from big moves, not having a lot of trades. One of the biggest things that stops most traders is they think they need a lot of trades. No, you need to get into a trade that makes a big profit. You don't need 10 trades that makes you profit. You need one trade that makes you a big profit. See the differences there, right? So this could be the TMF market right now, or TLT. I could be wrong, right? So far, I'm actually in profit. I bought it, and my options are up about 25% or something like that so far. Anyway, and as you can see on this big long-term picture over here, that's that next support level up the top here. So we could be now getting ready for, this is where we are now, this is where we are here. So we could be getting ready now for a rise back up towards the 60, 65 level overall from there. So as things start to peak out when it comes to gold, when it comes to the metals, we do know that's exorbitant bull markets. We do know that eventually it's going to end. And those that say this time is different, John, you don't understand. Unfortunately, it's going to end the same way with your bank account being zeroed and you staying at a job you hate. And then we have the good old TMF market here, and that's obviously the gold, silver mining sector. And that's where also when it comes to the stock market, and that's what I talked about at the start of this video, the stock market is giving us an analogous situation of, if we go down to this is all my, where are we here? The analogous situation that's happening right now on, so look, I'm looking at the crash charts here. My crash charts, just looking at, what am I missing here? What am I missing? Crash charts. There we go. Here you go. Crash charts. Okay, so crash charts. There we go. Crash charts 1920. So I'm always a study of history, guys, and the same things happen again and again for the same type of things, same type of reasons. When you start to study these markets, you start to get some signaling of what's going on and how things formed and so on and so forth. And again, this is the 1929 here. And even from that perspective, from there, let me bring this up to here. I want to show you something here, right? So on 1929, let's actually see if can I go back that far on the daily charts. I wonder if I can. So let's go to the Dow Jones. Let's take off the volume there, and what I want to do is I want to see if I can go back to, because this is gonna be pretty cool if I can. Can I go back to 1929 actual charts there? So I'm doing this live on the spot, guys, with you, live on the spot. Let's see if I can actually go back to that time, to where 1929. I'm pretty sure I can. There we go. It's loading up, which is pretty cool. 1965. Because I want to show you this here, guys, right? Oh, look at that. Isn't that just, that's a perfect example, actually. Look at this here. This here is a crash chart. This is the 1962 chart. In fact, I'm going to take a screenshot of this here, and I'm going to show you why in just a minute, of how these markets give us some signals. We don't always get the top, but I'm going to take a screenshot of that through there, and you'll understand why in just a minute. I take screenshots of everything, guys. Now there we go, new slide. Oh, I'm doing this live on the spot for you guys. I'll show you why I took a screenshot of that in just a minute, okay? Back to the topic at hand. Now let me, even here. All right. Even this one here. Let me, all right. This is amazing. I'm doing this live on the spot, but I'm seeing so many examples I can teach you guys. Let me go back to here. All right. Class in session for you guys. Hey. I'll share with you in just a minute what I'm looking at here, guys. If you guys don't know what I'm looking at here, just bear with me for a minute. You'll see what I'm looking at here, okay? So that's that point through there. Let me just make sure I save that. Doing this live on the spot. Now it doesn't happen all the time, but when we do start to get these, there's another one there. There's another good example right there. Beautiful. All right, okay, cool. All right, now, I'm actually looking at these markets and big exuberant bull market through there, right? Big exuberant bull market. And let's actually do this here, right? Here's another example here. Wow. Class in session, guys. I'm just doing this live on the spot, by the way, as you probably can tell. And again, I'm going to go through these screenshots in just a minute here, but you'll be able to see. Again, this is what I do, guys. I'm always creating screenshots of these patterns that I'm looking at and looking for, because I'm always trying to just get a little bit better here. Let's actually go to, there's another example there. Okay, let's go to here. Okay, there's another example there. Man, there's so many examples. Okay, cool. This is awesome. Let me go to crash chart here. And what I'll do, guys, is I'm going to go through these crash charts, but on the end of this video here, I'm going to play a training that's going to walk you through a lot of these patterns that I'm talking about here. You'll be able to understand it. There's a training that I did that actually walked through a lot of these crash charts here, but you'll be able to see the reason why I'm actually bringing up these charts here for a minute. And let's go to 1929. There we go, 1937. Oh, look at that. Look at the bottoming pattern as well too. Okay, so 1929. Here's the daily charts through here. All right, so 1929. And one thing you start to see from here, this is the 1929. Now, and again, I'm going to take a screenshot of this here now on the daily charts because I want to share something. I want to go through these here. One thing you'll notice, this is the 1929 here. And let's go down to now, I'm going to zoom right in on the daily charts here. And one thing you'll notice here is why I'm bringing this up here is that the market starts to give us some potential warning signals of tops in markets coming, right? So the first thing I'm always looking at is that people ask me, or people are wondering like, John, how do you just use one moving average to trade? And one of the most important part is the actual market. The market's always talking to us, okay? And the market's always giving us signals and signs about how, like where could be tops forming right now. Okay, the market does talk to us. The market, we just need to listen to it. A lot of times, one of the biggest mistakes that I made for so long in my personal trading career is I was listening to the wrong things. Stochastics, MACDs, RSIs, fundamentals, experts. All of that stuff doesn't mean shit. The one thing is what the market's doing, right? The people that actually push things back around, they do sort of give us some signs here. Now, what I'm talking about here is, yes, we got this was the big crash through here, right? But look what happened here. We actually, whenever the market goes through these different phases, and what I mean by this is that whenever the market goes through, if we go higher, low, higher, low, higher, low, higher, low, if we rally down and we come back up and make a lower high and we roll over, this is the topping action, right? The market in an upward trend, as long as we've been making these higher lows all the way up, higher, low, same low, higher low, and we rally down, see how it actually changed there, and then we got the really big crash from there to there. Make sense? Even on September the 11th, let's actually do this here. Let's actually go back to now. Let's go back to September the 11th. I want to show you this here because I think this is 2000 and so this here was September the 11th, 2000. This here was September the 11th, 2000, and that there. If we have a look at the S&P, I want to show you the S&P gives me a much better example of what I'm trying to share with you guys when it comes to the markets here, because the market does give us warning signs of, again, we never get the exact top here, but look at this here, right? So the whole September the 11th thing that happened, notice the market, like this was September the 11th here, right? And this is the very big crash from there. By the way, when it crashed, what ended up happening, we had a big bounce, didn't we? But notice how we actually had what? Down, up, lower, high, down, up, lower, high, down, down, big crash, up, lower, high, and then we continued out again, right? So you can see here that even though the market crashed, so to speak, because of September the 11th, we were in a bit of a downward phase with there, right? And then we started to form a bit of a bottom here, down, form a bottom, and then we started the big pick back up through here, right? But bottom, work its way out, and then we start to make our way back to the upside from there. So there's so much you can actually learn from the charts here. Now, again, this is where, like, coaching guys, I have a coaching group called the 1% group where I'm with them every day because I'm always teaching them different things about how to actually read this thing called the chart, right? So I'm looking at trend analysis. I'm also looking at things like what's called price and time patterns, which I've learned from a lot from WD Gann, right? Of the price and time patterns. That book actually that I got there, a lot of that stuff is actually from Jesse Livermore, by the way. Jesse Livermore, Paul Tudor Jones, and WD Gann, so on and so forth. So that book that I've created, which is about how to create affiliate trading solely, a lot of that stuff is actually, I've learned a lot of the mindset sort of stuff from Jesse Livermore, and so a lot of that stuff from Jesse Livermore is actually in that book. So it's not actually me. I'm just standing on the shoulders of the giants out there that have done really well. So again, when you get access to that free book, that first thing description there, it's not me. I'm just standing on the giants of these people out there, and a lot of that stuff in there is actually directly from them as well too. So That's why I've actually put together that book, because I believe that book is one of the greatest resources you can actually get access to when it comes to the mindset stuff. But when it comes to the trading techniques, I believe Gann is one of the most powerful things out there when it comes to this here, because I'm looking at the trend analysis first, right? And you'll see this level from here, right? You start to see now, trend analysis simply means here, right? Trend analysis simply means if we're making higher lows in the markets, higher lows, right, all through here, the market's an upward trend. But if we break a lower low, lower high, and we start to roll down, that's now what? A downward trend, okay? And the reason why I took screenshots here is because, as you can see, this move on the big picture here, the reason why this was this, because this was just, remember, a crash in the markets, right? A big crash in the markets really is what? Just a downward trend. That's all it really is. If I go to, say, even 2008, right? Let's go through here. Oh, geez. Right, this is 2008, right, guys? So remember, and this way, like, you never want to be fearful about the markets. 2008 was what? And we just look at the first thing, because the first thing is what? Trend analysis. So we can see here, if I take a screenshot of this over here, I'm doing a bit of a masterclass for you guys on trend analysis and crashes and tops and bottoms. Because the reason why is because we try to get a bit of a, right? Here we go, boom, right? So let me actually go through these screenshots here. Now, 2008, what happened in 2008? Yes, we had this point through here as what? That's when the whole Lehman Brothers thing happened, right? But what was happening way, 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 way before that? Firstly, significant higher lows all the way up, as you can see. But then what did we start to get? We started to get what? A lower low, came down, lower high, down. We had a little rally, came up, lower high. And then guess what ended up happening? See, that was the Lehman Brothers there, right? But we're already going down for about 6 months before that. And then, by the way, as you can see, right, what was so bad in the markets, and you actually start to notice this time and time and time again, which what is so bad in the markets seems to be the end of so bad. What I mean by that is that if you actually go back to this, I've really analyzed this to the nth degree. And what I mean by that is if we actually go back to this point through here on the S&P 500, and we go back to, do you know with the lockdowns, and what I mean by this is that whenever something is really good, that's probably the top of the market. When something's really bad, that's probably the bottom of the market, at least for a short-term level, right? You saw this with September the 11th, right? You saw it September the 11th where the whole thing that happened September 11th, we got a crash, but then we got a bounce. And this is where, like, trading is, a lot of the trading is difficult, right? A lot of the trading is difficult because, especially when we're trying to, like, get into some good times, a lot of the times when there's a lot of fear in the marketplace, and if you look at the fear and greed index right now, this here is the fear and greed index right now. So we're at extreme fear, right? So if you go back to here, throughout the last 12 months, when was the best time to buy? Down here in April. What was happening in April? Right? We do know in April what? In April was the whole tariff thing. So as this thing was coming down through to here, there's extreme fear. And this is where trading the markets is, a lot of people have problems, right? Because a lot of people like to follow oh, there's a lot of noise here. And then they follow it. And I actually got a comment a while ago. They said, John, if everyone is piling in, isn't that a good time to get in? That's what you think, right? It's actually the opposite in the markets. This is where the stock market and trading has always gotten, it's taken me a long time to figure this out, just from studying this here. Down the bottom here was the perfect time to buy. Yes, hindsight's 2020. Okay, well, let's actually go back and study what was happening back then. Firstly, down the bottom here, the fear and greed index was at 2. We're talking extreme fear. What was happening with the headlines at that time? Recession, that's it, Trump's gonna destroy the markets, blah, 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 all that sort of stuff. That was happening all down the bottom here. So as you can see, and the recession's gonna start, and Trump's gonna destroy the markets, and the big crash is gonna start, and the recession talk, all that sort of stuff comes out, right? That there is what? Now that's the perfect time to buy. But it's always the hardest time to buy, right? Because in that moment, you're like, oh, I don't know. And that's always, when we're talking at this level here, whenever it's the hardest time to buy, is probably where it's going to be the best time to buy, right? So as this market does come back down, guess what's going to happen to the fear and greed index? I believe there's going to be another buying opportunity coming real soon, by the way, out of this market. And I'll get to I'll get to what's happening here right now in just a minute. Here, But even back with COVID, and why I'm doing this here is I'm trying to share with you that whenever we went through here, right, this is the whole COVID situation. Now the thing is, is that down the bottom here somewhere, it was around about here somewhere. I don't know exactly what day, but it was down here somewhere when they actually announced the lockdowns. So think about here, right? The market went down, 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 down. They announced the lockdowns. Oh my goodness, the world's going to go to custard. That's the so bad news, right? Hang on a minute. But within a few months, that was actually the bottom. And within 6-12 months, we actually had this big rise. So I'm trying to share with you that this is one of the things that have problems with people who trade the markets, they have hard time understanding this stuff, is they go on the exuberance of these markets. Like gold, like the metals and miners right now, there's a lot of euphoria, big bullishness. That signals topping patterns, right? Now, again, no one knows the exact day, right? That's not what this is all about, right? No one knew the exact day with the bottom here, but if you want to have a high probability of the next 6 months of actually doing well, this is where like the real big fear in the market is actually best buying opportunities. And this is where like a lot of traders who don't understand this sentiment, it scratches their heads like, hang on a minute, how is stock market going up? How does the stock market find a bottom? We just made this here, right? And we go through there. So if I go back to my screenshots here, and this one here, why did I bring this one up here? I brought this one up here because, as you can see, low, high, low, high. Look what actually started to happen, right? We had a down and we failed through hitting. See how we rallied, but we failed and we start to break down. What is that? Jonathan, head and shoulder. Hang on a minute. Stop. It's just what? It's just now lower high, breaking this low. Now we're in a downward trend and we started to see this movement on the downside here, right? And even this little short-term little movement here, right? Firstly, we had all these major high lows all the way to the upside. And then we had what? Then we had down, up, and then that's actually what caused at least a bit of a short-term correction. And then we actually bounced from there. But notice one thing as well too. This is where, like, if you see any very big bull market for a couple of years, right? Whenever you have a very big bull market for a few years, we end up going through this sort of stuff here. That's why, guys, gold and silver, we're now ending for a year or two, right? We're getting very, very close towards the end of the year because every single bull market that lasts generally around 2 or so years, most of the time after that, we end up going through a year's worth of extension from there. And this screenshot here was this one here, right? You can see how we actually had this little down, up, little small, little lower high, and we had a little correction from there. This one here is the 1946. Why I took a screenshot of this one here, as you can see, is we had this low, high, low, high, low, high. But notice this here, low. We're making these, see how we're making these overall big swings to the upside, swing up, swing up, swing up, up, swing up, swing up. Oh, we made a lower high, lower low. See how we're rolling over here, right? Now we're making these lower highs. Trend analysis, and then we had this really big drop on the downside. So we have that through there, and then we also have things like this level here, right? So the small, sometimes in these very big exorbitant bull markets, we can come down, and you'll notice that we start to change the tune in the markets here. So we go from strong buyers. So if you look at this here in the past, what's happened through here, right? We've had what? We had this strong buying period. Strong buying. See how all these buying legs are pretty strong, right? They're strong, strong, strong. But what happened here? Notice how this buying leg was here, but notice how it was just quite weak and then we rolled over. That's the signal from the psychology of the market saying we're going through these strong buyers all the way up. Every single buying leg in the markets was given to strong buyers, but now we actually started to falter there. Now this is the very first time we actually started seeing these weak buyers instead of it being strong like that or boom, 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 boom. Now we're going like, you see the differences between this here and these legs here, right? So when we go to the actual stock market now, I'll make my way back there eventually. What's happening here? Now it doesn't mean the market's definitely going to go down. But that's where we need to watch for the warning signs because the warning signs are already written on the wall right now. And that is, as you can see, we're starting to get this potential. Look, buying leg. What's happening here? See how it's getting there weak there? So if we get a breakdown, that's going to signal that 10% correction in the markets. Now, by the way, once that happens, the same for the NASDAQ as well too. Now, I'm not calling that. As a trader, we want to wait to see what happens, right? If we do break down here, that's going to signal the drop to the downside, and same for the Dow Jones as well too. But by the way, guys, when that happens, say for example on the S&P 500, right? Through here. And let's actually just bring on the ES future here for a minute. Right. One thing I do see is this level from here, right? So all I'm expecting is to see a 10% drop on the downside. Let's actually bring up the same thing from there to there, right? So all I'm expecting is a roughly around the 6,000 level, around that 6,000 level in there, just a correction from there. And then that's just going to be a nice healthy correction. And now I'm going to zoom out to the big bull market from here. And now what we're going to see here is we're going to see this market come down to here, bounce, and then have another big rally. So I believe once this happens, guys, we're probably going to see a nice correction over the next 4 weeks, which is going to be amazing, because when that happens, then people are going to start to come in with tops in and so on and so forth. Fear and greed index is going to start to ping through there, and it's going to be pretty crazy from there. So there we go, traders. There's an update for you. Again, what I said before is that again, on the end of right now, I'm going to attach to this market update for you. I'm going to attach a training that I did that talks a lot more about these things here. When I talked about the actual the actual tops in markets. Here's an example here as well too. Tops in markets, and all that simply means is that whenever we do make these higher lows all the way up, but then suddenly we start to make this lower high break in this low, this here is the time whenever we do get this big drop to the downside. So there we go, traders. Enjoy the training. So one of the biggest things that actually stops us from getting ahead in the markets is fear, right? Fear. What if the market crashes? What if it doesn't crash? What's going on? I'm confused. The market's so volatile. Let's actually, what I want to do is I want to take off the blinders, the blinkers for you. And today I want to share with you how there is so much power in the charts. And I'm going to talk about the different major crashes we've actually had in history, 1929, 1987, and how just by really forgetting all the noise and letting the fear take control, how can we just utilize some simple techniques that really do make a massive difference in our lives when understanding, are we about to see a crash? Is there a potential of a down market? So that's what I want to share with you. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So before I start, guys, if you'd like to learn how I actually trade the markets, how I scan the markets, how I find my trades, how I find what I call my A+ quality trades that gets over a 90% success rate, I'm running a webinar today, guys. First link in the description, click on that, go register for my webinar, and I'll teach you all the details, how to find, scan, and also identify amazing high quality trades, powerful trades that can get over a 90% win-loss ratio. First link in the description there, guys. Go join my webinar that I'm running today. So let's go look at this here, right? So I personally take a lot, as you can see, look at this here. I have a lot of screenshots of different trades and different things I've done in the past, right? Do you guys take a lot of screenshots? Anyway, so let me bring this one up. Let me actually copy this for a minute, and let me go over to this one here. So we're going to look at this one here, and this is my good old PowerPoint. Rule number 1 is trend. The trend is your friend until the end, guys. I promise you, stick with the trend, especially the higher time frame trend, by the way. Bit of a side note before I get into today's update. If you're trading a daily chart, guys, always look at the weekly chart major trend and trade with that. You'll have a much more happy trading career. Anyway, so we look at this actual chart through here. So one thing that the stock market does, right? And I know this sounds really, really simple, but one thing the stock market does is this. The stock, for people that don't know about the markets itself, they're very, 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 very confused, right? It's like if you've been trading the markets now for 2 or 3 or 4 or even 5 years, you've probably gone around the world a couple of times or maybe more, right? Is that a song? And the purpose of me saying that, right? If you've gone down the indicator roll and stochastics and MACDs and swing trading, divergence and reports and all this sort of stuff, right? And you're like, and John, I'm still confused. Welcome to the club. So was I. That's what led me down a rabbit hole. But thanks to me now having 20 years experience in the markets, I've just learned, there's nothing really, the market just doesn't suddenly crash, right? And that's what this whole video here is, just to give you back the power. Give you back the power, right? So let's have a look at this here. So let's actually create this really, really simple. Let's create another little slide through here, okay? So whenever we have a market in itself, we have trend analysis, right? So we have market go up. So let's draw this out for you, right? So we have market go up through there, right? Let's change the color. So let's say we have market go up. And what I'm gonna do is I'm just gonna create this slide for you right now, okay? Market go up, and market go up. Okay, so we have this market go up. So now we're looking at it, we're identifying an upward trend, right? And so the reason why I'm going to be using this example, and you can flip it upside down for the bearish side, but the reason I'm going to be using this as an example is to teach you and show you, because obviously market crash is down, right? So we want to identify, is there a potential market crash? So let's actually draw this through here, and let's actually bring up, I'm going to copy paste that again, but now I'm going to change you to red, all right? Can we actually do a bit of a presentation live in front of you guys? Cool, let's do this here, right? So, and now look what we have here. What do we have? Nice little upward trend, right? Nice little upward trend through there. Yeah, we go, right? There we go. Another nice little nice little move to the upside, right through there. And let's just do another one through there, right? So another one through here. Let's just say the market does that through there. And let's say the market comes through here, right? So what do we have here? What do we have so far? We have what? And I know this sounds really simple, guys, but watch. I'm doing this right in front of you right now as a bit of a teaching video. Okay, firstly, this is how you identify the trend. Secondly, you'll start to see when the trend starts to change, what are the most important things to say, you know what? We are no longer in an upward trend, so if we're going to see a downward phase, now it doesn't mean we're going to crash, but it just tells you that we need to be alert, right? So let's actually go to no fill in. Let's go to outline. Let's go to no fill. There we go. All right, cool. And let's actually do that. All right. So what do we have here? We have low, and then we have another higher low. There we go. Back there. Another higher low, right? And then now we have what? Another higher low, right? So we have higher lows in place. So as long as the market continues to make these higher lows, then the market is still in an upward trend. Now you may be thinking, no, dude, John, you wasted 5 minutes of my life to tell you that. Hold your horses, right? Hold your horses. Let me explain something here, all right? So, but what happens if for some reason the next leg down is like this? And what that is let's go here, right? So let's go insert, a bit of fun here with you guys, right? A little bit of okay, cool, there, right? So what that is that's now a breaking of a low. Remember I said before that, now, as long as the market's making higher lows, the market's in an upward trend. If the market changes the tune, and let's bring on a good old purple, and let's make you a lot thicker, and let's make you dash, right? Dash purple. So if we actually break the low here, then what does that tell you? That tells you, because remember guys, you and me are not, we don't move this market around, right? Not you, not me, not a collective of us. We're like a little fly poo. Trillions of dollars are flowing through all these markets, right? Cryptos and especially foreign exchange, right? And then you've got commodity prices and gold and stocks. It's so much money flows through this. So you and me, we're a little fly poo. But let's look at this here. So we identified this level through here, right? And this is the reason why, guys, in my trading system, again, that first link in the description, go join my webinar. In my trading system, out of the 4 rules, the very first rule is what I'm teaching you here right now because it's so powerful. Anyway, back to the topic at hand. So we had this level through here. So now we've actually broken the low. What does that mean? It means that the market is no longer in an upward trend. Okay, cool. So now this could either mean it's likely to go sideways, or we could actually start to see a downward trend. And then what can actually happen sometimes is that the market will then get what? The market will then go for a rally to the upside, and then it will start to see a movement on the downside. But what was the warning to say, oh, if I'm long this market right now, this market could be rolling over and we could be getting ready for a downside. Now, I know this. What was the warning sign? The warning sign was what? This one right here. Okay. And I'm going to make that a lot. I'm going to make you. Let's make you. All right. Let's make you. We'll go red. Right. And let's make you a lot thicker. Just a lot thicker. That's what she said. I hope not. Anyway, back at the educational video for you guys. All right, so we have higher lows through here, okay? Then we break a lower low. Now, what is this one? This is a trend change warning, right? A trend change warning. So the trend change warning simply says, okay, we could be getting ready for more downside to come. And this way, guys, that let's actually take the power back here, right? There's this whole world of trading. It's actually not that complicated. Once we can start to remove once we can start to remove what we think, right? A lot of times when we go to the markets, we think, oh, the professionals, blah, 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 or this, what a lot of the stuff that we think is actually completely wrong, right? So now then this trend change warning then starts to make what? Then comes up, then now makes a lower high, and then now guess what? Now we're in a downward trend, right? And then the market goes down. Now there's no guarantees that this market is going to crash here. No, it could just be in a downward trend. But let's go apply that same analysis to all of the markets. Now I'm going to copy this, and I'm going to go to, this is 1929 crash. What did we have here? Look at this here. Easy. There we go, right? See that lower low? What is that? That's that lower low from what? Let's do another one. So now we had a lower low, lower high, and then this is the 1929 crash. So I know that sounds really simple, but guess what? That's that low through there, right? There we go. There we go. Hey, are you going to do it for me? No. Oh, there you go. Right. So that's that low. It created a lower low, lower high, and then the severe crash happened. Let's go look at the 1962. All right. I'm going to copy paste where the low broke it. Look at that there. That was a low, a slight lower low, but look what happened. Came up, made a what? Lower high, and then we had the big move down. 1966 crash. Look at this one here. This one here was definite, like a real spot on, right? Look at this here. So we had what? We had a lower low compared to this low here. And let me make you circle. That low there, right? So higher low, lower low. What do we have here now? We now have what? We now have lower high. Let's continue on here. 1987 crash. What do we have here? We had this one here, wasn't a lower low, but it actually started to create this pattern here where it created a lower high, it created a higher low, but then it created a lower high, and let me copy paste you over here, and it broke the low. So lower highs breaking the low. Who's in control through here now? Who's definitely in control at this point right here? All right, this point right here. Now the sellers, right? Because now we're in a downward trend, right? We're in a downward trend. High, low, lower high, and then the big drop. And then look at that there. 1980. Oh my goodness, 1987 came out of nowhere. 2008. Mr. 2008. Let's I need another red circle. Let's go 2008. 2008 did what? It created at least this point through here, right? Dropped a major lower low. Then created a lower high. It actually even started back here as well too, right? As you can see. Like look at this here. It started creating lower highs back here. But a significant lower low, lower high. And then guess what? The big crash was where? The real big bang was there, wasn't it? Right? That's where this right here was the big bang. Can I make that thicker? Anyway, you see what I'm getting there, right? So this here was when, oh my goodness, market's falling off a cliff. Like, it's like, look at this here, market go down. COVID, look at this here. Now, what did COVID do? Good old COVID. Now, by the way, guys, COVID is an anomaly. You can't really add COVID in there. But look what COVID did. What did COVID do? It actually created the double top, but look what happened. It broke the low, right? Broke the low. It didn't create a lower high, but as soon as it broke that low, guess what? You're saying, oh my goodness, it's over. Let's go. And then let's look at one of the last crashes through here. And this is where, guys, the chart is your friend, right? What's that there? What is this here? It's a what? It's a lower low. And now that's a lower low. And now look what happened. Came up, made a lower high. That's pretty much there. Look at that there. Remember I said before, like, let's go back to this diagram here. Lower low, lower high, and then the bear market starts, then the downside starts. Now, again, it doesn't mean this is when the crash is going to happen, but guess what? This is when you actually start to utilize, okay, if there's something going to happen, like right now as I'm doing this recording, if you look at the markets, if you're worried about a significant crash, something happened overnight, that is just off a fear or off a thinking, and that is not reality, right? The reality is that the market doesn't just go straight down. It may have a really sharp drop in the market, but to really have a big crash, which I don't think we're going to, we're going to start to see what? We're going to start to see this. Again, it doesn't mean we're going to crash. We could just have a nice downward trend. By the way, traders, what is a crash? The crash is what? Just no, this is 2008, right? It doesn't look too bad. Like, oh my goodness, global financial crisis, the market is over, that's it, the market, everything's dead. Everything's dead. That doesn't look like much, does it, now? Because why? We're removing the emotion. I'm like, oh, okay, yeah, this was 2008 stock market crash was 2008, 365 days, not 1 day, 2 days, 1 week. It wasn't COVID, right? COVID was a black swan that happens once every 100 years. But now looking at the crash here, look at the here, look what we're seeing through here. Low, lower high, and then away we go from there. And then we see where Bitcoin crashed, and as you know, Bitcoin came down through here. And then it did nothing for a while. People went quiet. And then now we had the very big moves to the upside. So if I go back to this chart here, look at this chart here. As we can see, look at this here. 1929, lower low, lower high, downward trend. Lower low, lower high, downward trend. 1966, lower low, lower high, downward trend. 1987 created a higher low, but then it created a lower high, and then we started to see this here. 2008, and also the Bitcoin market as well too. So if you are fear of having a crash and you're worried, we have the power in our hands. And it's not from a secret report or what Russia's doing or this secret long-term insider or no. Let's bring back the, as you can see, right? So what is our job? Our job is as the market is moving and starting to create, as the market moves and creates these patterns, guess what we should be doing? We should be completely 100% focused on this one thing. And again, guys, that's where, like, for me personally, with my trading system, when it comes to my A quality setups, again, guys, that first thing in the description, go join my webinar that I'm running today, and you will be able to see exactly why my trading system is so high probability. Rule number 1 is this. Then I'll start to look at rule number 2, 3, and 4, and like, oh my goodness, when you start to combine those 4 simple things. But that's the reason why, guys, off the back, this is the reason why it's a foundation to having a really successful trade for me. Because this here, guys, is what, remember, at the end of the day, the bottom line is this. You and me, we do not move the market. But the chart is like a footprint of what the collective of the market is thinking and feeling. Now we can go really deep into this market, like really, really, really deep about chart reading techniques and all that sort of stuff. And I do that in my trading course. That's second link in the description there. Especially in part number 2 and 3, I talk about like chart reading mastery and different things you can utilize there. But the power is in our hands, because all it is, it's just what we're doing here, guys. When we're reading the market, we're reading what the big boys are starting to think and feel, right? And this is sort of like a foundations of the trend analysis. Then we can start to look at other things, laying it up to a bit more advanced type of techniques to really start to really get a good understanding. Like, oh, look here. You know, the buyers used to be strong, but now we're actually really, really slowing down here, or we could be getting ready for a change, or all these sort of things. So the whole purpose of this video, guys, is to give you back the power, give you the power. So if you're worried about a stock market crash, or if you think about loading up on some put options or shorting the markets because you think the market's going to go to custard, right? No. Step back, right? The market doesn't work like that. The market will start to give us some sort of warning sign first. As you can see, all the major crashes in history, especially the really big ones, '08, Bitcoin, 1929, 1987, the market starts to give us some form of a warning sign that we may not go through. We don't know if a crash is going to happen, but it starts to say that, hey, we are no longer in an upward trend anymore, and the big boys are starting to sell this off for a reason. So traders, before you leave today, I want to give you an invite to apply for my John's Inner Circle coaching program. This is my top level coaching program, and this is for only serious people only. This group right now currently is only around 15 people, so it's only a real small group because I'm with you every single week in that small group. This whole group here, this John's Inner Circle, is about giving you exactly what you need to know on how to identify a really good high quality setup, trade management techniques, how I scan the markets, and so much more. Plus also every single week I'm doing live coaching sessions that help you with every single area that goes into becoming a good trader and so much more. So this is only for serious people only. This is my top level coaching program. It's only a real small group. But if you're at the point right now where you are absolutely serious about becoming disciplined and you really want to make commitment to becoming a good trader, then my Inner Circle may be a good fit for you. If you go to getjohnshelp.com, that's an application form. Go fill that out right now, and you and I will have a good chat on the phone, and I'll see where you're at, and you'll be able to see more about the actual coaching program. And if we're a good fit, then maybe we can move together from there. But if you're real serious about this and you really want to take this to a whole brand new level, and you want to be more than 95% of traders lose money in the markets, and if you finally want to start to crack into the top 5%, and even the top 1%, then this may be a good fit for you. So go to getjohnshelp.com right now. Apply for that. It's only for the first 10 people only. And I look forward to speaking to you on the phone real soon.